Imagine being able to sit back, relax, and collect passive income on your Uniswap V3 positions while they're being managed for you by a third party. If that sounds interesting to you, get strapped in because we're going to be taking a look at two different protocols in this video that do that for you. This is called active liquidity management. The first protocol is called Dyson and it's by the Sphere Finance team, and the second protocol is called Gamma. Now it's important to mention that both these protocols, Dyson and Gamma, are both aggregators for Uniswap V3. Now what does that mean, you might ask? Well, essentially what an aggregator for Uniswap V3 is it's a yield optimizer. They take the yields from Uniswap V3, they optimize them for you, and they do all the hard work for you. So all you have to do is go on Gamma or go on Dyson and deposit into the vaults, and they do the rest of the work for you and take a performance fee. Now to recap what Uniswap V3 actually is, Uniswap V3 is a version of Uniswap protocol, which is one of the largest decentralized exchanges out there. If you head over to DeFi Llama, currently Uniswap is the 6th largest dApp and the 2nd largest decentralized exchange with over $4.1 billion in liquidity. If you guys do want to learn more about how Uniswap V3 liquidity pools work, make sure to take a look at this video. Let's go and take a look at a benefit for a different aggregator. So right here, I'm estimating my fees based off of specific ranges through Uniswap V3. As you can see, if I use this range right here, I'm going to make about $2.05 per day off of a $1,000 deposit. Now, if I concentrate my range a little bit more, I can all of a sudden make $5.52 per day off of the same $1,000 deposit. And that's because we're concentrating our liquidity within this specific range. The downside to this is if the price goes above or below this range, you don't earn any fees at all. So as you can see right here, there's times where Ethereum is trading below this range, which means that we wouldn't be earning any fees whatsoever, which is exactly why we have to actively manage our liquidity, which means once the price goes out of this range, we need to open up a brand new position with a brand new range, which could get very complex depending on how tight your ranges are. And with our goal of Uniswap V3 being to earn passive income from our liquidity pools, it turns to be not so passive whatsoever because you're constantly having to rebalance your pools, which is exactly where aggregators like Dyson as well as Gamma come into play because they actively manage and rebalance your pools for you. They do all the hard work for you, so all you have to do is deposit into your pools and you're good to go. So you're probably wondering how exactly I found these two DeFi projects, Dyson and Gamma. So I actually came up with a DeFi strategy report that shows you exactly how I find decentralized finance projects to actually invest into for passive income. This is 100% free. All you have to do is enter your name and email address so I can send the strategy to you. That link is going to be down below in the description, so make sure to check it out. The first project, Dyson, is a part of the Sphere Finance ecosystem, which considers themselves the S&P 500 of crypto because they're building different products for different use cases. Now, some of their products include Penrose, which allows you to earn boosted yields on Dystopia Exchange, also Unknown, which is the same exact thing as Penrose but on the Binance Smart Chain, and then of course Dyson Money. Now hopping into Dyson, it's a pretty simple UI to use, but essentially you will go and find different pools and you'll be able to deposit directly into these different pools. Let's go and take a look at this pool, for example. As you can see, what I'll do is I'll go and deposit a certain amount of each asset. As I shift up the USDC amount, the wrapped Ethereum amount goes up. And then all I have to do is hit deposit and stake and it will automatically deposit this into Dyson Money. Now the other thing I could do to deposit is actually zap into it, which as you can see right here, I just select the amount of the asset that I want to deposit and it will pretty much convert this USDC into the proper amount of wrapped Ethereum and of course proper amount of USDC and deposit me into the USDC to Ethereum Uniswap V3 position. This makes it easy so I don't have to convert some of my USDC into wrapped Ethereum or vice versa. Now of course the downside to Dyson is the fact that they take a 20% performance fee. That means that they are taking 20% of the yield generated. If they don't generate any yield, then they are not taking their 20%. Only 20% of the yield generated, which isn't too bad at all, but again, that starts to eat into your profits. If you make 100% off of the yield and they take 20%, now you're only left with 80%. Now, Dyson is on the Polygon network, Arbitrum network, and Optimism network. So the only network that they are missing is actually the Ethereum network on Uniswap. And I'm assuming the reason why they're actually missing the Ethereum network is because they only have $12 million in TVL right now, and the Ethereum network has very, very costly gas fees to the point where these positions and strategies wouldn't even be profitable on the Ethereum network. If you made it this far in the video, make sure to drop a like and subscribe when notifications turned on so you never miss a passive income opportunity. Now, of course, what kind of video would this be without showing you my actual results from these different strategies? So I deposited into Dyson just about 12 days ago on February 9th, 2023. Now, I initially deposited $876 in the WMatic to USDC pool. And now, as you can see right here, I've lost about $22.70 after gas fees. So that means that the current value of my assets are $853.90. Now, while a $22 loss is not bad at all, I deposited on February 9th when Matic was at about $1.34 per token. And as you can see, currently Matic trades at $1.38 per token. The price of Matic actually went up a few cents over that 12-day period, but the thing is I still ended up losing $22. How is this even possible? Well, that's because of impermanent loss. Whenever they are closing out these positions, they are finalizing that impermanent loss, making it permanent loss, and then opening up new positions. And that's the one downside to actually having tight liquidity ranges and constantly having to rebalance the pools. The thing is, that impermanent loss could actually end up eating up the fees that you generate. And another thing I want to go ahead and mention is the fees that I earn from this pool are automatically compounded back into the pool, which means that my deposit value of $876 would have been a lot higher if you add in the fees. It would have been upwards near $900, $910 possibly. So that being said, if you do plan on using Dyson money, personally, I would target the high APR pairs. That way, impermanent loss does not eat up your fees. Now, last but not least, let's take a look at Gamma because it's very similar concept to Dyson. However, there are a few different things and the UI is a little bit different. Now, one thing I will mention about Gamma is not only do they support Uniswap v3, they also support QuickSwap, which is another decentralized exchange. On top of that, Gamma has two different offerings. First off is automated concentrated liquidity strategies, which is for individuals like you and me. And next off, they actually have something called enterprise strategies. So they're actually selling a service to businesses as well, which is actually pretty cool, and I figured I'd mention that. And of course, enterprise strategies are going to be for those investors that have hundreds of thousands of dollars that they want under management. Now, unlike Dyson, Gamma actually supports every network that Uniswap is on, including the CeeLo network, which nobody actually uses on Uniswap. So that basically means that Gamma supports Polygon, Ethereum, Arbitrum, and Optimism, the four main networks that Uniswap is on. Now, Gamma does have their own native token called Gamma that you can actually stake and earn a percentage of the protocol revenue generated. And right now, the staking APY for Gamma is about 6%. So obviously the yield isn't too attractive. However, taking a look at the different liquidity pools that they have, let's go ahead and first start off on the Optimism network because that's the network that I'm deposited on. And I decided to test out this OP to USDC pool, and since this is on the Optimism network, they're also giving a boosted yield of actual OP incentives, because if you guys don't know, the Optimism network is providing their own token, OP, as incentives for actually depositing into specific pools. This is almost sort of like an airdrop in a way, and right now the pool that I'm in isn't currently earning any OP incentives. However, previously it did earn about $5 in incentives. Now, I deposited into this pool about 18 days ago on February 3rd, and I'm currently down about $62, and that's after I was paid out about $4 in staking rewards for OP token. So as you can see, my initial deposit value was $515, and currently I have about $453 in this strategy. Now, one thing I do like about Gamma though is it actually shows you examples and live analytics of these different pools. So as you can see, it will show you an example of when rebalances are triggered and when it will actually adjust the ranges of these pools. So if you take a look at this chart right here, the line is going to be the price of this pair, and then of course this light gray area is going to be the range of this pair. And then the dark gray area is going to be outside of the range. So as you can see in this specific pool, the price is consistently in this range. But the trade-off is, of course, impermanent loss. One thing I will say is back on February 3rd, OP token was trading at $3.18 per OP token. And now it's currently trading at $2.51 per OP token, which is actually about a 20% decline in price for OP token. However, if you actually go ahead and take a look at my deposit versus my current value, this is only a 12% decline in price. So I've only lost about 12% compared if I were to just hold OP token, I would have lost about 20%. So far, I would say Gamma is actually performing better than Dyson because when I deposited it into the Matic to USDC pool, Matic was actually at a lower price than it's currently at, and I still ended up losing money. However, with Gamma, when I deposited into this pool, OP was at a much higher price and actually went down 20% to current price. However, my position only fell 12%. Now, with that being said, both of these platforms are very, very good platforms. I'm not here to dodge on either of the platforms, and I personally love both of them. It's all about entering and exiting at the right time. If you enter at the very bottom of the market and you exit at the very top of the market, you're most likely going to end up making money. And with that being said, both of these strategies are more long-term strategies. They aren't strategies that you get in and hop out within the time span of just 2 weeks. You need to be deposited into them for 1 to 2 months, and I'm eager to see how the Dyson and how the Gamma strategies are going to perform over the time span of 1 to 2 months. And of course, if you guys do want an update video within 1 to 2 months, make sure to drop a like and subscribe with notifications turned on. As always, I hope to see you guys in the next video, and peace out.